Hello everyone, it's the Canadian Futures Trader here. Thanks for checking out this video. Before we get to the actual video itself, I want to do a quick introduction. This video that you're going to watch is actually part of a larger series I've put together for futures traders. I started out futures trading just a few years ago, and I found it really difficult to find good information to learn how to trade futures. So what I've done is put together this completely free course. It's on my website. There's a link down below. There's no upsells. There's nothing for sale on my website. So just come absorb the information. If you like this video, definitely encourage you to check out all the others in the series as well. On top of that, I mean, there's just a ton of written content and it's only going to grow. I'm only going to add to this over time. This is my way of giving back to everybody. It's all the information that I had to figure out on my own when I first started, and there's no reason that everybody should have to go through that process, and there's no reason you should have to pay for expensive courses that really don't teach you much of anything outside of the basic. I'm going to leave you with that. Enjoy the video. I'm going to be giving you an example of what I'm calling the range play. I'm going to admit up front, it's not the best example, but it is an example and it does demonstrate it. So leading up to entering this trade, one thing you have to understand, one thing I'm looking for is the treasuries sometimes get stuck in a range, like any product, right? A lot of products do this. They just bounce back and forth between several price levels. So the treasuries had been bouncing back and forth between kind of 190. I mean, they had been down as low as 198 up to about 08 and just kind of bouncing back and forth here in the ultra bond. So I'd finally seen it happen enough that I said, you know what, let's try to get in here at a price of 02. We have a very clear stop. We know the range is right here in this area. And the reason I say this isn't a great example is it's not obvious based on the volume profile here. Based on the volume profile, it looks like it's traded at all prices, and it has during the session. But at the current period, the last half hour, it's really been locked into this little tight range. So that's what I'm playing off of. I'm going to go long here. I have a limit order with the ultra bonds since we're really just looking to grab a few ticks, 2, 3, 4. Every tick counts. So I'm going to put a limit order. If it ran away and I didn't get filled, no big deal. I would just wait till the next go round. So I'm going to let this play in a second. I do get filled here. You'll see I set a stop, I believe, 3 ticks down. And then I set a take profit as well up at where I'm looking for it to hit. So this type of play, I'm really just looking to grab that bounce from the low to the high of the range or near the high of the range, and then rinse and repeat. Once it gets up to that high, I would then ride it down low. One thing I will mention is I personally try to enter very near the bottom or very near the top. Again, since every single tick counts, especially in the treasuries, it's not like we have a lot of margin for error. Let's say the range was from 00 up to 08. I wouldn't be one to go long at a price of 04 because there's a lot of potential. Like it could move to 03, 02, 01, and I still wouldn't know. It would still technically be in that range, but at that point, I'd be 3 ticks out of the good. Try to get in at the very top and the very bottom. It makes it very clear as well if you should get out. If you get in at the very bottom and it continues to move 1 tick, 2 ticks against you, get out. It's broken out of that range. Sure, it might come back, but it's done something that it hasn't done for, say, the last hour, and you don't want to be a part of it. So I'm going to let this play. You'll see here I get filled in just a second. You have buyers evaporating. I'm 5th in the queue. I'm looking to go long for 4 contracts, and there I get filled. So I immediately set my stop loss at a price of 31. 3 ticks down, probably more than I want, but hindsight is 20/20. Now, in these initial stages in a trade, I'm always ready to cut bait. If it had moved from 02 to 01 to 00, I'm probably hitting flat and I'm just getting out. So I'm not necessarily letting it come all the way to my stop loss. The stop loss is really there as a protection. If it did just fly down, I at least can get out of the trade for a 3-tick loser. But realistically, if it was creeping down, I'd be getting out at a better price, better meaning less of a loss. Now, at this point, nothing's really happened. We're just kind of stuck here, which in some ways is encouraging. We're not seeing any pressure downwards. We're seeing a little bit of movement upwards. So I fast forwarded just about a minute just to cut out some dead time when it was just basically sitting here. And what you're going to see here in a second is we're finally going to get our move up. I immediately moved. So actually, I'll take that back. I didn't move my stop loss. I put on a trailing stop on purpose. It's trailing by about 3 ticks, it looks like. Now you can always manually manage, and I'm fine with this take profit. I'm not looking to move it. There's no reason for me to think it's going to go flying up here somewhere. I mean, at this point, I know I could flat it and still to get 2 ticks of profit, so it's not a bad trade already. I'll point out, I actually have really good Q position, so even though there's 250 contracts on the sell side, I'm 72nd in line. And that's part of why, too, you want to set those take profits, because if other sellers do pile on, you have a good Q position. So you might get filled before other people come up. Now, you never know. I mean, who knows? It might come and clear these sellers out. It might move higher, but you at least have good Q position. So I paused the video for a second because it actually fills really quickly. So even though this trade went on for several minutes, it happened in kind of spurts, right? It kind of sat, we got filled and it kind of sat, then it moved up 2 ticks, and then it kind of sat for a minute or two. And you're going to see, I'm going to let it play. It happens lightning quick. Buyers come in, they wipe out this price. Buyers come in, they wipe out this price. I get filled. I don't know if they wipe it out, but I get filled nonetheless. They wipe out enough contracts that I get filled. So this ends up being a nice 4-tick winner just based on playing this range. So I'm going to let it play. You can watch right here. And just like that, you see, I'm going to pause it again for a second. The video pretty much ends. Buyers came up, they cleared out this price, they cleared out this price. You had some immediate backtaking, and it's basically right back to where it was just like 10 seconds ago or less, except we got a nice fill. And I'm always all about taking the quick win. So even though this one was several minutes, I wouldn't necessarily call it the super quick win. I'd rather just capitalize and get that 4-tick winner than be still sitting in this trade, wondering if it's going to push up higher. No, we're playing the range. We got a 4-tick winner out of it. Consider it a great trade and then move on. We can always re-enter this. If it gets up to the high of the range, maybe it's an opportunity to go short and ride it the way down, basically repeat the exact same process. Thanks so much for watching, and I'll see you in the next video.